What's going on, everybody? Welcome back to my YouTube channel. So today's lesson is on multiple time frame analysis. Now, a lot of you have been asking me for this, so I thought that I'll get it done, and I really hope that you enjoy it. Now, I just want to say I am running out of ideas to be able to help you guys continue growing as traders. So in the suggestions below, make sure you let me know what you want and I'll get it done for you. Also, smash that like button for me while you can. It'll only take a second or two, and let's get the intro rolling. Okay, so what is multiple time frame analysis? Well, it's just simply the process of going through a higher time frame and then scaling down to the lower time frames to look for an entry. So what's the point in this? Well, I've mentioned it before. Our first time frame is going to be based on structure. So when we're looking at this time frame is ideally going to give you a directional bias in the market. So is the market structure pushing to the upside, or is the market structure pushing to the downside, or is the market moving sideways? The next time frame that you're going to use is what we call a behavior time frame. So this time frame is going to give you a clear direction of what the market is doing. Is the market creating lots of wick rejections? Is the market breaking structure? Is the market pulling back to create higher lows or lower highs, etc., etc.? The next time frame that we're going to look at is our final time frame, which will be our entry time frame. And this time frame is simply going to be what it is, our entry time frame. If the market is in a downtrend, then you're looking to take short positions, and if the market is in an uptrend, then you're looking to take long positions. This looks kind of funky, but you know what I mean, okay? So let's go through it. Let's clear the charts and let's move back up. Okay, so we're back at the charts. For this example, we're going to be using, or we're going to be looking at pound JPY. We're going to start with our first time frame. The first time frame that we're going to be using is the 4H time frame. Now, in my personal opinion, this is my favorite time frame to trade on because I just love what this structure does, or what the 4H does in terms of structure. For me, it's just the balance between not having to wait too long and not having to feel like I'm rushing into trades by using the hourly or the 15-minute. It just gives me a good balance for the week as an intraday trader, or a day trader, should we say, whatever you call it. So let's look at this market structure. First things first, what do we see? Is there a clear directional bias on this market structure? Now, the majority of you will be looking at this and your eyes will be focused on everything that's happening here. Well, no. What I'm focusing on as a day trader is what's happening over here. I don't care what's happened to the left. You're not going to see me bring over support and resistance. I'm not going to start plotting levels like this and trying to figure out where price is going to respect, or where price is going to go, or what price is going to do when it gets to these levels. I mean, look at the screens now. It's just absolutely pants. So I'm not going to be doing this. I'm an intraday day trader, and I want to trade what's happening in the market today and the market's behavior. So I'm looking at what's happening here. So what is my directional bias? That's what I need initially. Well, at the moment, I don't have a directional bias. I can't see what the market's doing because the market is ranging. So what I'm going to do is I'm going to mark my high just so that I know that's where price is respecting. Not that I'm looking for sells, just where price is respecting. I'm going to mark my low. Now, looking at how the structure has moved, I can see the majority of the wick rejections have been in and around this level here. Now, I'm not worried about this price action right here. And the reason for that is because price has broken out and broken back in. So in theory, if this was a true representation of a sell structure, then in theory, we should respect this level, or we should have continued pushing down. So this fake out, as you may know it, or a breakout, break back in, as I call it, is nonsense. This right here just doesn't exist for me. Okay, I just see this as a big indecision. So now moving forward, I have my high marked out and I have my low marked out. What is the plan now? Well, the plan is to wait for a clear directional bias. I want to see if the market will break above to indicate momentum pushing to the upside, or I'm looking for price to break the structural lows to indicate momentum to the downside. Now, clearly this is on a replay mode, because if I was to do this in the live markets, we'll be looking at 4 hours until the first candle closes and I get my directional bias. So just work with me on this, okay? So now let's press the next candle. So the market pushes to the downside. Now it is very, very strong bearish. Now, do we have a break of this low? Well, no, we don't. What we're looking for the market to do is create a clear identifying mark of breaking and closing below structure. We're talking a clear identifying mark. So we want to see price breaking strong and closing. Now look what happens. If you decided at this point in time it was time to scale down and look for some entries on the lower time frames because you thought this was the breakout, and you start doing what most traders do, which is start doing all of this and then doing this and then saying this is the breakout here, look, or no, it's just broken this low, you're going to find yourself in big trouble, right? Look at the candle that came immediately after this. Look at the price action here, what came immediately after this breakout. Okay, so you have to just make sure you're waiting patiently. So the next plan of action, once we see price breaking out of this structure to the upside, what are we doing? Well, first we're identifying that the directional bias of this market for today, for our trading session, is strong bullish. That means we have a directional bias. Now what do we want to do? We want to go down to our behavioral time frame. The behavioral time frame, as you can see here, is clearly identifying that the market is really strong bullish. We were sitting in this range and we've finally broken above it for a long period of time. That is now telling us that the bulls are clearly in control of this market. Now we can't take an entry on this because we're never going to take a buy when the market is pushing to the upside, and we're never going to take a sell when the market's pushing to the downside. What we're looking for the market to do is exhaust and come back to a key level. So where is our key level? It's right here. Our key level is right here. We know this is our key level because this is where price was respecting for a very long period of time. This is where price was failing to break above for a very long period of time, and now we've broken above it. So what we want to see the market do is just come back to this level, and we are just patiently going to wait. Once the market gets back to this level, as it has done, what we can now do is we can adjust this slightly. We know that price has been leaving wicks behind here, leaving wicks behind here. Bodies are not closing above, and we can see prices come back to this level. Now, this does not mean we're going to rush in to take a buying position. That's not how we trade. Remember, this is not our entry time frame. If we do something like this, this is called trading on impulse. And trading on impulse will lead to disaster. Okay? So, let's remove this. We have price back at our key level. Just go back to that point. Be patient. Okay? There's no reason why you need to get into the trade first. You can get in second and third and you're still going to be all right. Because the truth is, understand this, if the momentum of this market is going to continue bullish, then that's what it's going to do. Okay? If you're wrong, you're wrong. Get out, find the directional bias, and get in the right trend. Okay? Now, moving down, or moving on, we can see prices come back to our key level. What do we do now? We're scaling down to our entry time frame, and this is the last time frame that we need for this multiple time frame analysis. So look at this. Prices come back. Now, what most traders will do is they will look for a trade immediately on this time frame. We saw what happened when we took an immediate trade on the hourly, and look, if we take an immediate trade here, we are also trading on impulse. Now, I'm telling you now, what I'm telling you is just literally going to change your career as a trader. Okay? Like, I'm giving this to you, and this is just golden nuggets. And I'm not gassing this up. This right now is going to change your trading forever. Okay? We saw on the 4H time frame, which was our structural time frame, that the momentum of the market was up, so we're looking for buys. We saw on the hourly time frame that the momentum at this moment in time is down, but all we needed price to do is come back to our key level. We see the wick rejections, so now we're scaling. Our final time frame, I want to ask you before I tell you, where is the momentum of this market structure? Think about it. If you tell me up, you were wrong. The momentum of this market structure is down. We are looking for buys only. Make sure you know that. We are looking for buys only. So when we're looking for buys, we are looking for buys in an uptrend, not in a downtrend. At the moment, looking at current price action, where is the momentum? Clearly down. And what is the trend? Clearly down. So what we have to wait for is for price to shift in line with the 4H time frame being bullish. We need the trend on the 15-minute time frame to change from being bearish to to then showing us a strong sign of it being bullish. So remember, all the buys that these retail traders are taking down here and all these impulse entries that retail traders are taking down here, look what's happening to them. They are getting stopped out. Now, we're not phased because we know what the higher time frame is doing, so we are waiting patiently. We need to see that this market structure is respecting this area. And in order to do that, what we need to see happen is a trend change. So now, notice, for the first time in a very long time, price action was not able to break above this red line. Okay, view this as a brick wall. We can now see that price is starting to respect this key level. We have it in the back of our mind that the 4H is strong bullish for this period. And we know that the 1H has come back to retest this key level. All these buys that these retail traders are jumping in impulsively, they have lost. They have been stopped out the market. And now look what's happening. The bulls are showing their presence. Based on market structure and based on simple price action, we know at this moment in time, the market is changing its directional bias. We can see that it's gone from being in a downtrend to now clearly identifying itself as being in an uptrend. We're now following simple rules, which is never buy in a downtrend and wait for evidence and confirmation for an uptrend to be present. Once we get this information, that's when you can take a trade. And I like to take stop entries because I like to enter with momentum. And for me personally, it's just been the best way to trade for the last 4 years of my life. And we set our entry as a buy stop. We go for our 1 to 3 risk reward ratio, and then we let this trade play out. Now, the thing is with this trade is that we know we're trading with the right direction because the trend is up. We also know that the 4H has presented itself for this period of time as being in a strong bullish phase. And on the hourly, we know prices respected this structure. Now, maybe I shouldn't have spoken through that so we could really get a good feel for this take profit. But look what's happened here. We have 3 time frames, we have 3 confluences, and we have our perfect entry. Perfect entry does not mean it needs to win, but it just means that the odds are more likely to be in our favor than not. And that is how we do multiple time frame analysis, the Rocks FX style. Only joking. I hope you enjoyed that, guys. Please smash that like button, subscribe if you haven't, turn on notifications, and until next time, take care.